Okay, here comes the video on Sunday the 7th of August 2022. Do hope you are doing well. So in this video I want to talk about emerging market ETFs and how to use a relative strength indicator to identify buying opportunities. Now I've talked about emerging market ETFs before, and there's actually a feature article and video up on the Emini-Watch website, and the title of the article is Do the Better Indicators Work on ETFs? Yes they do. And this was the original video that was put up, and that was published in August 2016. It's subsequently been updated, but the original publishing date was August 2016. Front cover of the video is Lenin talking to the crowd, and the reason for that was that back then the best opportunity in the emerging markets was actually the Russian stock market, and RSX is the ETF that tracks the Russian stock market. And you might be thinking to yourself, good Lord, when was Russia ever good, the Russian stock market ever a good opportunity? Actually it was in 2016. I don't know if you remember back then, but in the lead up to the presidential election, Trump was making a lot of very positive kind of comments about Russia, and that people were expecting a period of détente, of warming of relationships between Russia and the US and the rest of the West. So for 6 months or so, the Russian stock market was very interesting, made good money on RSX. But, of course, subsequent to that, the Democrats turned Russia, the whole Russia story, against Trump. We had the Russia hoax, and ever since then, I don't think the Russian stock market has been an interesting play. And, of course, over the last 6 months or so, it's been a dreadful play. But anyway, that is the old article, and the reason for doing an updated video is my process has changed, and I just want to show you what is it has changed to, and why right now is an interesting time to kind of review it. So you must be thinking to yourself, what the hell is he talking about with equities and emerging markets? And I have to agree, you know, the general sentiment in the general public at the moment is, for want of a better term, to hell with equities. People are kind of fed up. The performance is down over the last 6 months. The last place they want to be playing is in equities. And of those spaces, the even worse performing than the equity space is the emerging market equity space, and you can see that on the better rotation indicator. So this is an indicator on the Emini-Watch website that you can get for free, and it looks at the relative performance of the major asset classes here. And we use ETF data, which is handy because we can put it all on one chart that covers each of these kind of major asset classes. They're a little bit bunched up. So we take the raw data here in the upper pane, and then we translate that into the rotation indicator here on the bottom pane, where everything is adjusted between 0 and 100. So we have the worst performers and the best performers, and then you can see that crude oil was the worst performer during 2020, but has become, since 2021, the best performer by a long shot and for a long period of time, and all the other asset classes are kind of bunched down here. And the worst of the worst is the emerging market equities here, with EM equities down there. Now I'm just going to change this chart slightly so that you can see that. Emerging market equities, let's make that a bold line. There we go. Now, the reason for talking about emerging markets, from time to time, emerging markets is very interesting. They tend to bounce between 0 and 100. They're either at the bottom of the chart or at the top of the chart. So you can see here back in 2017, they're at the top of the chart. 2019, they're at the bottom of the chart. 2021, they're at the top of the chart. 2022, they're at the bottom of the chart. So it tends to be one of those plays that's either full on or full off, and you're kind of either in it or totally away from it. And right now, it's a sector that's been super beat down. And what I'm not interested in is buying the most beat down of all of those opportunities. I mean, the worst performing of all of those is the Russian stock market, RSX. I'm not interested in picking up the worst performing asset in the worst performing asset class. What I'm trying to identify is the best performing asset in the worst performing asset class, and that's why we should be using a relative strength indicator to identify that, and this is how I do it. So on this chart we've got all 20 of the major emerging market ETFs, so 1, 2, 3, 4, 5 along the top and 4 rows. There's 20 of them there. and I use the iShares, which I think is now owned by BlackRock ETFs, because they cover this space really nicely. You can buy an ETF that tracks one particular market. You can also buy them that track a region of markets, and also that have sub-asset classes within a region as well. So for example, mining within South America or something like that. But each of the national markets is covered quite nicely by the iShares ETFs, and we have them all lined up here. Now, it's all bunched up on this chart, but each individual chart is quite easy to understand, and I've just got one indicator on those. This is EWJ, which is the Japanese ETF here. We've got the price bars along the top here. This is just a daily chart of EWJ, and the indicator that I add is just a canned indicator, which is the percentage change indicator in TradeStation. And all of the different charting platforms will have exactly the same indicator as percentage change. And these are the settings that I'm using. So I'm just comparing closing prices on a daily chart, and the look back length is 250. And I've chosen 250 because there are approximately 250 trading days in the year. So we've got about 50 full trading weeks a year, and we've got 5 trading days in those weeks. So 250 trading days. So it's effectively an annual look back period. Not interested in the highs and low alert, but I do change the colors. So when we're above the zero line, the line is colored cyan or blue. When it's below the zero line, it's colored in red, and that's what it looks like. So currently minus 18% performance relative to a year ago in the Japanese stock market. And what I'm looking for is the best performing numbers here. So you can look at all these numbers: minus 18, minus 25, minus 6, that's not bad, 21, 27, not bad, 33, horrible, 27, and so on. And this is how those markets kind of stack up when we put them in a nice little table, compare them to the US. So if I put on the SPY tracking the S&P 500, the performance of the SPY over the last 250 trading days is minus 6%. And they kind of group into about 4 different groupings here, the emerging markets. The worst performing up here at the top with Russia, minus 78%. Let me show you that. So this is RSX, Russia, bang, that chart, boof. Now this fell out of bed for obvious reasons, but it's interesting to note that for some period of time during these trading days, the RSX ETF was not trading. Because the Russian stock market was kind of shut, and so we had nothing to kind of trade against. But obviously the performance has been appalling, with almost down 80% from a year ago. But that's what RSX looks like compared to the others. We've got South Korea, China, Eurozone, Brazil, and Taiwan. Those are kind of the worst of the worst. And there are some good kind of macroeconomic reasons why some of those are doing well. Obviously, China going in and out of lockdown, manufacturing start and stop, distribution out of the ports kind of start and stop, so not doing well. Taiwan, for obvious reasons, is kind of beat down at the moment. No one's very confident about what's going to happen in Taiwan. The Eurozone obviously also beat down at the moment, not doing too well there. But then we've got some worse performing markets: Singapore, Japan, Australia, Switzerland, South Africa. But then things start to get interesting. We've got Philippines, Turkey, the UK, Canada, and then we've got some markets that are doing either just as well as the US at minus 6 with India and Mexico, or actually better at minus 3 for Thailand, Chile, and plus 17 for Indonesia, which is just an extraordinary number. Now, my process to get to a short list, because I'm going to show you 4 of those markets. I'm going to show you Indonesia, Chile, Thailand, Mexico, and India. So actually 5 of those markets on charts. So my process, first of all, is to use the relative strength indicator here to look at compare each of the markets and say which is, the cleanest shirt in the laundry hamper. So we've got 4 of those markets that are 4 or 5 of those markets that are looking interesting. In the old process, I used to look at the dividend yield, and I'd use the iShares website to look at that. And there's a link on that original article to the iShares website, and you can use their pull-down menus here to select ETFs that are just looking at equities, and the regions and markets that I select are the emerging markets, the non-US markets there, and that gives us a table. and either just rank the table then in descending order of yield. So that they've got a 12-month trailing yield, but that's kind of good enough to see what's kind of going on. And we can look at what are the best performing markets there. And of those, we can see that a few kind of popped up in terms of their dividend yield. So we've got Brazil here at the top, which ended up being one of our worst markets down here at -21. So obviously their dividend yield has kind of popped up because the performance is so weak. But we actually have India here, 8.16 with a very high yield at the moment. And we've got Chile as well. It's just under 8%. So that's India and Chile. And they're on our list here. India, bang, and Chile. So not only are their dividend yields still pretty strong, their performance relative to the US has been as good or better than the US over the last year. So you can look at that as another kind of check as to what might be going on in terms of an opportunity. And then once I've identified the strongest performing of those emerging market ETFs, what I want to do is look at each of them in terms of their charts and the better indicators here. So I go back to the traditional view with the better indicators, where we've got two panels side by side, where we've got everything to do with price on the right hand panel here with better sine wave, calculating the cycles and trends below the price bars, and then we put the cycles and trends on the price bars themselves with the highest time frame support and resistance in bold and the lowest and intermediate slightly thinner and very thin lines for the lowest time frame. And on the left hand side, everything to do with volume. So we've got better momentum below the price bars, and on the price bars themselves we've got better pro-am, and we've got professionals identified with blue bars, and yellow are amateur bars. And what I'm looking for is what is going on with the professionals. So I bump up this chart and we can see what's going on over time. So this is Indonesia. So this was the strongest performing of the lot with a +17 performance kind of down here. And we can see that, yep, over the last 6 months or so, they've kind of gone nowhere. They've been sitting in a little bit of a channel and doing quite well. Now Indonesia got beat down really hard at the beginning of the lockdown, and that's because they took their lockdown extremely seriously at the beginning of 2020 here. And you can see we had Rambo patterns at the high, which is amateurs buying a breakout. They got taken out when we dropped through this support here, and the professionals sell it down through support at 22, and then they pick it back up down here at 12. So we've had a bounce from there. But what is not totally convincing on this chart is that the bounces up, we have professionals taking profit at the highs. So they're taking profits here, we track a little bit further higher. They jump in here, but we get a bearish divergence signal and we kind of fall off pretty hard in the last couple of months. And the move back up at the moment is being driven by the amateurs, all amateur up bars there. So I must admit, although the performance of Indonesia has been good, I don't particularly like that chart with the way that the professionals are looking. So next chart is Chile, and again we'll bump up the Chile chart here in order to look at what the professionals are doing. So here's the market was definitely weak coming into 2020, into COVID lockdown, and then it fell out of bed. Exhaustion sell patterns down here, but no blue professional bars, kind of anxiously picking it up at 20. Isn't great. They kind of pick it up here, but we keep on tracking down, and then they sell it down here and then pick it up at 22. But when we bounce back into 22, no blue professional bars, and this little move here, we're still in a downtrend, and it's been amateur bars up to 27. So again, the Chile chart doesn't particularly kind of interest me from what the professionals are doing. So let's look at Thailand next. Now Thailand, here's the same thing, kind of weak into 2020, falls out of bed, not a whole bunch of blue professional bars at those lows, and then when we come into these lows, we're bouncing off Rambo patterns here. So we've got Rambo, Rambo, and Rambo. So Rambo stands for potential reversal of an amateur breakout, R-A-M-B-O, reversal amateur breakout. And that means that the move to those lows or highs is being driven by the amateurs and is potentially suspect. And so that's what happens. The amateurs are selling it here. They got kind of wrong-footed. The market moves against them. They're driving the activity here. They're driving the activity here. And the last time the professionals were really interested was on the highs up at 80. And so they've not gotten interested down here. So again, Thailand, although Thailand is obviously benefiting from the movement of manufacturing out of China at the moment, not totally convincing that this is a good looking chart. But let's look at some more interesting charts. Mexico. Now this is better because we have exhaustion sell and some blue professional bars kind of come in here. At the highs though, you can see here we got rainbow patterns at the highs, and at these later highs here, no blue professional bars. And in fact what we're seeing is blue professional bars picking it up at the low, at the low, at the low, at the low, and they've come in here, and we're potentially holding around here. We've had exhaustion sell and bullish divergence kind of come in, a little bit of an amateur push here, but that 45, 46 level there is looking interesting for the professionals to keep it. Now if we look at better sine wave here, it's an area of support, but we're waiting for these two lines to kind of come together. So in the highest time frame, these two lines needs to come together to have a thick support line here, and also when we get that little thin line, which is the lowest time frame, come together, we might get an area of support. So that whole area there is looking interesting for support at 45. We've got exhaustion sell and bullish divergence. We've got blue professional bars that are interested on the lows, and if that area holds and we break into an uptrend, so Mexico might be looking good for a play there. And so Mexico was by -6, so tracking the US quite strongly there. And again, you know, the macro story with Mexico is that a lot of the manufacturing and inward investment is coming into Mexico because people are kind of starting to exit China, or have started already to exit China, and Mexico is looking like a good regional play. And then lastly, India. Now India, again looking at the better pro-am kind of activity, and this is really nice. So the sell-off that we had at the beginning of COVID seemed to be kind of delayed in India, not as didn't happen as quickly. We were still strong the 6 months prior to COVID, and when we had the sell-off, yep, pretty hard from 35 to 23 or whatever, whole bunch of blue professional bars kind of come in here, exhaustion sell bullish divergence, and it holds. And then on the move up, we've got every time we come into weakness, it seems like the professionals step in. Professionals step in here, and they step in here. No blue professional bars at the highs there. Now they didn't come in here at 40, which is a shame. We had exhaustion by bearish divergence, weakened from there, but we bounced from that point. I'd like that more than the other charts, the Indonesia, Chile, Thailand, and so on. So India's looking interesting. And then when we look at the cycles here, this is good. So we've just had a triple going. So we've got triple supports happening. All three lines are red. We've got support on the highest time frame, we've got support on the intermediate time frame, and we've got a little pullback to end of trend support come in on the lowest time frame. So everything's going to come together there, and we bust into an uptrend at that point. So of those, Mexico, let's wait and see. That's looking interesting for us, area of support around 44 to 45, to kind of have a bounce from there, because we got blue professional bars coming at the lows. And India, because everything's kind of come together in terms of supports there, and we have, it's been an area traditionally of professional activity there. So 1, 2, potentially 3 areas here. So any little weakness, let's look for kind of either amateur down bars or professional down bars, and a break back up above that kind of high here at 43s and a bit. So that's the process. You can look for the cleanest shirt in the laundry hamper, and look at the emerging markets as a group. It's been super beat down over the last year or so, but some of those markets are a lot stronger than others, and when we identify the strongest of the lot using a relative strength indicator, you can also check it to look at the dividend yield to see if it's kind of also a nice yield play, and then look at the individual charts themselves in order to see where the professionals are active and whether there's support for a continued rally in that market. So there we go, relative strength indicator and emerging market ETFs, and I hope that video was helpful to you.